Hey everyone, welcome to another video. So in this video, we'll try and understand the reversal of GST credits that is availed on purchases when there's a non-payment by the recipient to the supplier beyond the 180 days period. Now, generally for availing any input tax credit of GST, what you pay on your purchase of goods or services, there are 6 main conditions attached to it. But in this particular video, we'll discuss an additional condition with respect to the payments to be made by the recipient to the supplier. And to understand this further, let's take the help of an example. Say you have a supplier and you have a recipient in this particular transaction. The date of the invoice wherein the supplier is selling goods to the recipient, the date of invoice is 1st Jan 2026. Say, for example, the value of the goods is 10,000 rupees is the taxable value. And then on top of that, assume an 18% GST that comes to 1,800 rupees. So 11,800 is the total value which the supplier mentions on the invoice for the sale of goods to the recipient on 1st Jan 2026. Now, the provision here as far as GST, availment of GST input tax credit is that the recipient is bound to make a payment to the supplier for the entire value of supply within 180 days from the invoice date. So invoice date was 1st Jan 2026. On or before 30th June 2026, the recipient is bound to make a full payment of the entire value to the supplier. And if he does not do it, the recipient is bound to reverse the GST portion on that particular invoice in his return. So when he does not make a payment on or before 30th June 26, in his subsequent GST return, he has got to reverse this 1,800 rupees of GST, basically reverse from the pool of ITC and pay to the government. The provision also says that on top of the reversal, the recipient also should calculate an 18% interest on this 1,800 rupees from the date he had availed it. Let's say he had availed it when he had filed the 3B, the GST return for Jan, let's say by 20th of Feb, and he is still not paid by 30th of June. So from 20th of Feb right up to 30th of June, he's got to calculate interest from the period he has availed this input tax credit in terms of 1,800 rupees till the time he is not paid. He's got to calculate the interest on top of this 1,800 rupees and pay to the government. So you have a reversal of 1,800 rupees and a interest payment also to be made. And let's say a case where the recipient does not make a full payment because of some kind of a liquidity issue. He's only making a part payment, let's say 60% of the entire value supply, which comes to 7,080 rupees, 11,800 of 60%. Then what the provision says is that, okay, since he's only made a part payment, 60%, proportionate input tax credit is to be reversed. So 60% of 1,800 rupees is to be reversed and paid back to the government. And on top of the 60% of 1,800 rupees, you calculate 18% interest and pay that also to the government because you have not yet made a payment from the date you had made an availment of the input tax credit. So for the full payment, for the full non-payment, or for the full partial payment or whatever, you have to proportionately calculate the input tax credit that you got to reverse, and then on top of that, calculate interest. This is an added condition as far as your availment of GST input tax credit is concerned. Now, the main agenda of this discussion is to find out what is the implication of this particular condition. So as far as the supplier is concerned, he has sold goods to the recipient, and on the face of the invoice is mentioning 10,000 rupees as taxable value and 1,800 rupees as GST. Now, whether or not the recipient is making a payment to him within 180 days or not, he has got to file his GST return and pay this 1,000 rupees to the government because that's his obligation or liability. He will have to do this from his own pocket because he's not yet got the payment from the recipient. And as far as the recipient is concerned, since he has not made a payment on or before 30th of June 26, that is the expiry of 180 days, he has got to reverse this 1,000 rupees, reversal from input tax credit pool or pay to the government. He's got to do that on the expiry of 180 days and also pay interest on top of it. And this leads to a question of double taxes to the government, because in the first instance you have the supplier paying 1,800 rupees to the government even before, irrespective of the fact that he's got the payment from the recipient, and then you have a reversal issue here when the recipient does not make a payment within 180 days. So the government gets 1,800 rupees in the first instance, and then by way of reversal of payment, the government gets another 1,800 rupees. And this leads to a double taxation effect. No revenue loss to the government, a double taxation effect to the government. And on top of that, like I said before, you got to calculate an 18% interest on the GST amount and pay that also to the government. One more thing here is that now, after 180 days, let's say the recipient is getting some money and is paying it on 2nd of July 2026, then the provision here again says is that, okay, now that the recipient has made a payment after 180 days, he's free to re-avail the input tax credit that he had reversed earlier. So the condition does not restrict the reversal or restrict the recipient totally from not availing input tax credit. Because he has not made a payment within 180 days, he's got to reverse it. But as soon as he makes a payment after 180 days, on the subsequent return, he can have the benefit of re-availing that input tax credit. Anyways, coming back to this particular implication example, wherein at the first instance, the supplier got to pay 1,800 rupees, and the second instance, there's a reverse of 1,800 rupees, and this gives to the double taxation effect for the government, for supplier and recipient put together, which goes to the government. And on top of that, you have an interest of 18%. The second important implication is the fact that there would definitely be a contract. If it's a regular supplier, regular recipient, between the supplier and the recipient, there would be a contract negotiated. And in the contract, there would be a clause with respect to the credit period allowed for the payment to be made for the supply of goods. In some capital intensive businesses, manufacturing businesses, the credit periods could exceed for more than 180 days. It could be a 270 days, 9 months, for example. The provision says is that it does not pay any attention or heed to what is mentioned in the contract or the agreement. Even if the agreement says 190 days or 270 days or 360 days, it doesn't matter. Irrespective of whatever credit period is mentioned in the contract or the agreement, you have to follow the provision. If the recipient has not made a payment within 180 days, he has got to reverse the input tax credit that he had availed earlier in respect to the purchase of goods from the supplier. So this leads to the contractual freedom being affected between the recipient and the supplier. It also leads to working capital issues, financial issues between between the supplier and the recipient. And definitely this leads to, like I discussed before, an effect of double taxation. Now, this was challenged before the Gujarat High Court very recently in December 2025. The case is still pending, wherein the constitutional validity of this particular provision, this reversal of input tax credit due to the non-payment within 180 days, was constitutionally challenged at the Gujarat High Court in December 2025, for which the ruling is still pending. The main idea of this particular case was that for genuine commercial delays, you have this provision creating a lot of financial difficulties, working capital issues for the recipient, because he's got to reverse his input tax credit, even though the formal credit period as per the contract agreement is exceeding 180 days. Maybe it could be a 190, 270 or 360 days in this particular case. Well, it's a wait and watch in this kind of a situation. We'll see what the Gujarat High Court has to say in this particular case, where the constitutional validity of this payment provision was challenged. Well, I hope I was able to make things clear in this particular video. If you like the video, you could show support to us by hitting the like button. If you would want more videos like these on a regular basis through way of notifications, you could also click hitting on the subscribe button. Till then, I'll see you guys in the next video. Take care and thank you.